My name is Jesse Ergot. I'm the President and CEO of NeighborWorks Northeastern Pennsylvania. Happy to be here to moderate these breakout sessions on home ownership over the next hour or two. And I'm really happy to be joined by two panelists for this first breakout session. Chris Casciano, Senior Vice President of the Credit Union Operations for the Community First Fund, and Leslie Winder, who's Director of Community and Economic Development for the Urban Affairs Coalition in Philadelphia. So thank you both for joining us here for this discussion on home ownership. Our goal is, again, as you heard from the theme of the whole event today, is about action. So we start with identifying those barriers that folks that many of us serve and who are in our community as our neighbors face when they're trying to purchase that first home or build assets for themselves and their families. So that's what our panelists are here to discuss. So again, we appreciate them making the trip to join us for that. I'm just going to dive right in. Our first question that I'm going to ask for our panelists are, what trends are emerging in the homeownership financing landscape that stakeholders in the room and throughout our community should be aware of? And are there good examples? Have you seen public funding has supported other local or regional mortgage products? So, Leslie, maybe we start with you for that.
I was actually going
to. All right, you can kick that to Chris.
Only on some of the financing.
Yeah, no problem. I'm going to give you this, Chris, so that you can. And feel free to stand, walk. Again, we can be informal here.
Yeah, I'm glad to start off the program. I think changes in the financial landscape, very interesting changes in the financial landscape. Technology is playing a big role in mortgage lending now. I mean, if you're mortgage lenders out there, I think you see a lot of different types of processing of mortgages, a lot of digital mortgage happening now after the pandemic. So many avenues to get mortgages without actually meeting that borrower. So you see big lenders, using technology to really create a lot of competition in the landscape. Other interesting methodologies that are out there. SoFi is out there doing crowdfunding, to fund mortgages, which is kind of really interesting. And you're seeing a lot of integrated home buyer services. Zillow is kind of into this whole thing where they'll find you a house, they'll find you a realtor, they'll find you a mortgage. Okay, so they're bundling a lot of processes that normally would be handled by a realtor, by a banker, and by a servicer. And so they're putting all of that together. And so what that does, I think, to the person trying to buy a house in Scranton is it tends to push a lot of that higher stuff into a very competitive marketplace. And so how do local banks compete with that? And how does a borrower get access to it? Because they'll all look for the top 20%, right? Because this is a fast process. So the best borrowers will get credit fast. And Michael, you said it in the thing this morning. You talked about borrowers buying cash and buyers buying cash, and people that are kind of looking for financing out of the picture before they even start. Absolutely. Because somebody's coming in. And this is kind of a very similar atmosphere. It's not just going to be cash borrowers. It's going to be fast approval borrowers going through these fast systems. Right. And so that's the landscape. That's kind of going to be a little tougher. And so the question is, how does a lender combat that? And I really do think it's partnerships. You forge these partnerships to get to the other 80%, and you make them marketable. Right? You work with those people to make them marketable on their level, and you compete for that other 80% of the market, and you can compete very well. When I say partnerships, I guess what I'm saying is that bundled approach, cultivate, go on the level of a person who is having difficulty getting a mortgage. Meet them where they are, if you will, at that level, and build them up, as a team, as a community team. Financial education, mortgage education, and savings, help them to save, to budget, and get into a situation where they become marketable. And at that point, they've been your customer from the start. They're not going to a digital or a bigger marketplace. You're cultivating buyers in your marketplace. I think that that's really an important part of it.
Yeah, that I totally agree. It's a collaborative, multi-stakeholder approach. It is not just the lenders. Chris talked about the number of different lending products that are there, but that's different lending products within one lender. There's multiple lenders, and they all have different lending products. And then there's the public funding that becomes available, whether that's city or state, philanthropic, but there are a number of different other programs that are out there. And it's in talking about cultivating the buyer, if you will, that goes back to home buyer education. And starting at day one. Day one is not when they decided to buy the house. Day one should be when they're started thinking about the whole home buyer process. And that's really how you can guide through. But there are so many products out there. How does a buyer on their own know how to find these, know what they might be eligible for, know the opportunities to layer these various programs? I think that's the thing is that in terms of trends is that there are so many, everyone recognizes that affordable housing is an issue. I facilitate or manage the Community and Economic Development Committee, which is a board committee of UAC. And that committee has got banks, regulatory organizations or agencies, and CDCs and other housing like community organizations in the city. But we all sit at the table sharing information, addressing the issues in the city. And we had a planning session 2 weeks ago and did breakouts to kind of talk about what are we looking at, what are the hot topics, if you will, in the upcoming year. And across the board, affordable housing was on everybody's list. So everyone is thinking about it. All of the lending institutions are thinking about it. All of the organizations are thinking about it, and the cities are thinking about it. So we, luckily in Philadelphia, have this collaborative table with almost all of those representatives to talk about what we can do to address that, and at least how we can get word out about this information.
And Leslie, I'll follow that up with the opportunity that you have as the Urban Fairness Coalition to have all of those all of those perspectives in the room and thinking about this as a big picture for the city. Have there been some good examples in the last couple of years of what's coming out about how to kind of leverage public dollars to support first-time home buyers or mortgage products?
Absolutely. One of the programs that we administer is called Home Buy Now. It is actually funded by PHFA through a fair grant, but it is an employer-assisted housing program. And that means that the organization, company, what have you, employer is offering a housing benefit to their employees. The buy-in from our perspective, if you will, is $500. So it can be as low as $500 benefit that they are offering to their employees toward their home buying process. And however the organization sets it up is totally up to them. A lot of our anchor institutions have more stringent criteria. Anchor institutions meaning our universities or hospitals. Drexel, for example, has a $15,000 employee grant. We then match up to $4,000. You've got to be at 115% of AMI. But it is great because it not only helps the organization in terms of employee retention, it helps the employee, obviously, bringing more dollars to the table. It's an economic development tool. But I would say that what's great is that we've got this committee that we sit around and we talk about these issues. We update the information on how many more grants we've been able to give out in a given time period. The biggest challenge really is expanding that market, and the only way we're going to be able to expand it is by getting more and more employers participating in it.
Yeah. And
I don't think employers know about that around here.
Well, so that is our program. Home by Now is a Philadelphia-based program, but employer-assisted housing is not a new initiative, if you will.
Yeah.
It's actually been around for a number of years as more and more employers are looking at how do they, one, retain employees? How do they recruit new employees? What are they doing to contribute to the economic development in communities? Employer-assisted housing benefits have become, they're looking at increasing beyond medical, dental kind of thing. So it's relocation costs, and a lot of times that gets roped into or tied into a housing benefit. What we did in Philadelphia with the Urban Affairs Coalition is, and worked with PHFA, is establish this program where if an employer is offering a benefit, again, and they're resident of Philadelphia, buying a house in the city of Philadelphia, and at 115% of AMI, we will match that up to and those go straight to closing costs. All programs are a little bit different. I was on a panel recently in DC. The National Housing Conference has developed a toolkit, and I'm happy to share this information. You guys can send out the link later. But there's a toolkit on how organizations, companies can begin to think about how to do their own EH plan. And it kind of talks about the pros and cons. And
do they have to be first-time homebuyers?
So for our program, no. For the company's program, they set their own parameters. A lot of times it's said it could be how long they've got to stay in the house. They will give a much higher dollar grant, if you will, or benefit to their employee. What's interesting is one of our most active and engaged partners is a relatively small nonprofit. It's called Special People in Need, and I think they give out more grants than anybody else. And they're not huge. They're about $2,000, but we match that to $2,000. So now they've got $4,000 going to their closing costs or going to their down payment.
Well, that can help somebody get a better house too.
Absolutely. Absolutely.
And I would go to I'm a new realtor, I could go to an employer and tell them that there's a corporation that pays for the college, why can't you pay for someone's?
It's the same kind of.
Same concept,
exactly. In Baltimore, and I'm not totally familiar with it, it's called Baltimore Live, I believe, or Baltimore Live, rather, is a city organization. And their funds come from the city. I believe their grants are $2,500, but it's the same principle. And it's so, as long as you are moving, if you have work for a company in the city of Baltimore, and you're buying a house in the city of Baltimore, then you qualify for this Baltimore Live grant.
Well, the problem in Northeast is that there's not enough product.
Well, that's
That's a whole separate issue.
That's a whole separate topic.
We're not tackling that one yet. Come back to breakout session 2. We're going to talk a little bit about that.
That's an issue where affordable housing, one house and there's 20 people waiting for it.
And so jumping in, I think, Leslie, that's a great example of something that is an existing program. So, for example, I know the University of Scranton has an employer-assisted housing. Not many people, they don't advertise it widely. We've talked to them about helping with that if they want to expand it. But the concept of actually matching those with other funds through PHFA or other partners is, I think, a great concept. And so I hope our friends from Scranton Area Foundation are making highlighting that note as we move forward. So, Selena, did you have a question?
The cities that match those funds for the grants, like the one that you talked about in Baltimore, where is the city getting their funds from?
You know what? I don't know. And it may be, if I'm not mistaken, I said I'll make sure to send the information out. They're capped, I think, at $2,500. They may have a limited pool in terms of those dollars that are available. I'm not really sure how their financing works.
Just the program you have with Lackawanna County, the woman told me that there's only 15 spots.
Yeah, so those funds may come from a lot of different sources. It's just a matter of who's prioritizing resources, whether it's public dollars, other private dollars, local, state, federal. tax
And
dollars. There's lots of
TS thinks it should do an extra $5,000.
yeah, there's lots of different ways to combine those. So yeah, we'll definitely talk more about that. I actually want to kick it to Chris. And first, Chris, if you don't mind, just talking a little bit about Community First Fund as a CDFI. Some people in the room might not understand kind of what the Community First Fund does, and the intersection with this type of lending and mortgage products. But also, I want you to follow that up with kind of some thoughts on who your population is that are the primary beneficiaries of that work, and what kind of barriers you're seeing them face.
Well, let me answer the first question, and then I'll get to that. About funding sources, as Jesse said, a lot of different funding sources. But a lot of times HUD will produce money for the city that creates the programs, like the one in Baltimore. And there's another couple of interesting programs in Baltimore, that work. And we could talk about those a little bit later maybe. But to Jesse's question about Community First Fund and what we do, well, first of all, let me tell you, we're all about DEI. That's pretty much our mission. Very highly focused on helping people to build wealth. And home ownership is kind of a key, it's a keynote to get people on a path to build wealth. It's one of the best wealth building possibilities. People build equity in home ownership. And so we try to get them focused on, building an asset to build wealth, building on that type of asset to build wealth. So we meet them, kind of where they are. That's kind of our motto is, Andrew said it this morning. It's got to be proactive. You go to them and you get into their community, all of the communities, I should say, and you just talk about what's your dreams, what's your aspirations, where do you want to be, and how can we help you financially try to get there. And so with the Community First Fund, it is Leslie's point of matching funds. We often find various sources to get people grant money in different things based on what they're trying to do. So different directions on what they're trying to do. So it's a matter of knowing that person, knowing what they're trying to achieve, then matching up the available funding for them to try to layer it. We almost always want them to match with savings. We want them to have skin in, because I think that's part of that whole financial education, that nothing really is free, okay, but there are hands up, but there's not really hands out. And we find that people are very receptive to that. And I also think that when you get people on a one-on-one, what's your dreams and aspirations, and we do it across the whole low to moderate income scale. And as we saw today, every class falls into low to moderate income. Some of them fall into low to moderate income. The interesting thing is, in the end, all of those answers are all very much the same. They all just want a piece of America, right? And I think it's a great thing. So where we sit with it is trying to find the funds. First, as we find out what the need is, we then go to funders to try to fund those needs. So it really starts from how can we impact this community? And for Community First Fund, impact in everything we do, impact is as equal or greater to our production of loans, our production of income, our production of money. It really is, how do we impact the community? And if it's not impactful, we just don't do it. There are other people that will do it, but our mission is impact. And so that's what we really focus on it. And if it's a deal that can be made, it's probably not our deal. The way we look at that. That's what banks are for. We're not here to compete with banks. We're here to assist them. So, if we could do the piece that says you need a down payment, well, if we could get you the down payment, you get your loan, we've made impact. Mm-hmm. And that's how we look at this. But it is a partnership. As a CDFI, a Community Development Financing Institution, we have some ability to do things that banks can't do because of the fact that you're a little bit different regulations. So we can help you to get your deals into a position where they can be regulated effectively, right? So we can put equity into a deal when you can't make a deal without equity. And I think that partnership, and banks are our biggest partner. To be honest with you, the majority of business that we get on our business side and the CDFI side is from banks. And we've expanded recently into the credit union to try to serve the people, again, not that banks are serving, we're not trying to compete necessarily with banks, but we're looking for low to moderate income people that are having trouble becoming bankable. And our hope is that we bank them, we get them bankable, we teach them to be banking, and then they have a choice. Whatever bank they want to do business with, they're able to do it. So it's really a matter of building capability and helping people to match what they have with what they need. And as far as partners are concerned, who are some of the other partners? PHFA is a great partner in the Philadelphia area for us. We do a lot of joint funding with PHFA help in some of our biggest projects and in some of our small projects. And as Leslie said, at Baltimore, we still are working off a Philadelphia program that Baltimore now runs called Project Reinvest. And what that is that's where the city helps match funds so that there's down payment money, closing costs, they cover closing costs, which is a great program. But the good part about that is once that money kind of clears, we can use it again and again and again. Right, so we build off that. As it comes back to us, we can reissue it, and it comes back to us, and we can reissue it. So as long as our borrowers are cooperative, and let me tell you, they are. I mean, our delinquency rates will match with delinquency rates anywhere else, simply because that pride in what they want to do is really amazing. When people have the ability to compete equally, that they really produce. They really produce for you. So I think that don't miss that population because they will add to the entire flavor of the community.
So I'd love to ask Leslie this next one. We have representatives from at least 3 community or regional banks in the room that I see. In your work with the Urban Affairs Coalition, it sounds like you've got some good partnerships with those regional and local lending institutions that help figure out the solutions and be part of this. Can you speak to how you integrate the banking community into your the products and programs that are being rolled out?
Well, as I said, I facilitate the meetings of the CED committee. So that's the Community and Economic Development Committee, which is a board committee. 3 of UAC's board members actually sit and co-chair the CED committee. We convene quarterly and so it is made up, as I said, of banks, and we've got every major bank and some of the regional banks that participate, FDIC, Federal Reserve, OCC, PHFA, and then organizations like PACDC, Habitat for Humanity, NeighborWorks, are all part of our CED committee. So they're all talking about, convening on a quarterly basis to talk about the issues that affect our communities. And a lot of times it's like, okay, but what can we collectively do? Banks are often, their hands are tied a little bit more just because of all of the regulations. But they're ideas that come out of the lending institutions. And it's then, how do we collectively do this? So again, our Home Buy Now program came out of the CED committee. All of our financial advancement networks, which is our wealth building, financial literacy classes, all came out of that. We have in previous years, I've been with the organization for a year, but in previous years there were some small business lending programs that were done. But it really is having this collaborative, multi-stakeholder convening that are all kind of focused on the same thing and bringing ideas to the table. I'd say the CED committee has probably been around since the early 2000s, if I'm not mistaken. And it is a valued source within our programs. One of the things that I've learned is that I don't think that the city recognizes just how strong this committee is, given the players that are on it. So one of my goals is to kind of increase the visibility of our work, not just talking about our what comes out into program services, but we had Register of Wills recently at one of our meetings talking about tangled titles, and I don't know how big an issue that is in the Scranton area, but it is huge in Philadelphia, and how that affects generational wealth, and looking at more and more things that can, from an advocacy standpoint, that we can do to help build and talk about generational wealth. But it really is having all of those together at the table, and it makes a significant difference.
Thank you. So, one thing that we heard about in the earlier session this morning was about the challenges that certain members of our community have, around building generational wealth, the lack of access to financing historically, and some other challenges. Have you seen some really useful tools that have come out to try to address that, especially when we see folks who didn't have the opportunity generationally to build those assets and pass them along to folks in their families? Obviously, we know that makes it harder for them to come up with the down payment and to kind of get the financing that they may need that others have access to. Obviously, we know about down payment and closing cost assistance programs that exist all over, but are there other types of tools that you've seen that have been very effective in either Philadelphia, Lancaster, or other communities that you serve that might be replicable here in Scranton?
Well, as Jesse said, a lot of those programs are available, and matching of those programs becomes important. So I think that's a key component part. But we also have people in our communities that just are not traditional borrowers by nature. They're immigrants, and they're not residents at this point. So they might be resident or non-resident aliens. Of course, in the mortgage industry, we like to focus on residents, right? But resident aliens, but they still are ITIN borrowers, as they're referred to, and that's not anything that should be a negative thing. What it is it's just a tax number. In other words, it's people that are working in this country, and they need to pay tax just like we do, and they will. So, and how they do that is they're issued an ITIN number. However, because they're not residents, it's difficult for them to get financing. As Leslie said, there's regulation around it. It's a higher risk type of loan, if you will, because there always is a risk of deportation or flight. And then whoever's holding these loans have difficulty dealing with them. You can't just take a property without notifying an owner. If the owner's not around, foreclosure and resale becomes an issue, and so banks really struggle with that. So in our Philadelphia market, we've been very successful in making loans to immigrant borrowers. It's a target that we have set so that we can build home ownership to people that are working hard in this country and trying to just have a good place to live. It generally is, as we said, it doesn't start when they're looking for a home. It starts when they're thinking about looking for a home, and we build with them. Interestingly, when they actually are done building in our program, they are all mortgage qualified. We use Fannie Mae, Freddie Mac guidelines at the end, except for they're not residents, right? So that's the only thing that's not a qualifying factor. We leverage, any type of matching funds that might be, and we have time to do that as we're working with them and learning what they're trying to do, where they're trying to buy, what might be available in certain neighborhoods that might not be available in other neighborhoods, to show them that this would match with what you want, and there's available money to help you with it. So actually at the end, for anybody that's in the mortgage market and underwriting mortgages, they look the same except for that they're not residents. And so they tend to perform as well. And, our history has been, and we've been in this business for 15 years or so. And, again, we will match our delinquency rates with anybody that's making mortgage loans anywhere. And oftentimes, I will say this, that there's an accelerated pace that they want to own this home. We often find accelerated payment in these things, which is they just really want to own it. And so they'll double up and triple up payments, and it's kind of really exciting to see. And there's nothing better than making that type of loan and having somebody walk in and own, what is really a piece of America. That's what they want, and they want a place to live. And we find it to be a very exciting market. But the good news about this is because it's becoming an issue and more people are tackling it, there's a developing secondary market that will actually help take these loans from your shoulders if you're a small nonprofit trying to do this and don't have a lot of funding, don't have funding sources that are consistent. Basically what will happen is they will take that off your balance sheet and you can do it again. They refund you, they buy that loan, and you make another loan. So it's doable, for a community to have a CDFI or any type of lending institution that would be willing to take on I-10 borrowers to be able to get that started. And I think that that's a really exciting thing for the Scranton area, because you do have a lot of developing immigrant possibilities to work with. There's a number of different communities coming into Scranton now. And I think it's a real opportunity to cultivate home buyers for the future.
Leslie, how about in Philadelphia? What barriers do you see that some of the specific population, people of color, new immigrants, others that may have faced? And are there other types of programmatic opportunities or partnerships or leveraging opportunities in addition to just traditional down payment closing costs programs that you're employing?
I mean, the barriers are certainly those that we all know, have heard about, experienced, what have you, and those continue to exist. And unfortunately, it has become a generational issue, and trying to untangle that. And when I use that word, I actually want to stop for a minute and talk about tangle titles. And I assume that is an expression or a term that people are familiar with, but that means that someone is living in a house, they're maintaining a house, paying all the bills in the house, the upkeep, maybe even paying the mortgage on the house, but their name is not on the deed because their mother, grandparent, relative, maybe even a friend died with the assumption that the house was going to this person, and they don't own it. And the process, and so that means that they cannot apply for financing to get the house in their name, or to do any work on the house. So there's a great, and it said thousands and thousands of homes in the city of Philadelphia, and this is not a proud confession, but right now I'm in the midst of being involved in tangle title as well, having lived with my brother who recently passed away. But it's very interesting to know all about this and still find myself in the same kind of situation. In terms of programs, as I said, it really is it's an awareness thing. There are a lot of programs, but it's trying to find the right place for them. We are participating in one of the collaboratives in the Worth Initiative, the Wells Fargo Worth Initiative in Philadelphia. That's Philly 5000, where we will be working on, or are working on rather, increasing, welcoming 5,000 Black and Brown homeowners to homeownership. And we were going to have a website that will be a repository. The goal is to have a repository for all of this information. But it's incumbent not just for a public awareness of it, but individual lenders knowing about all of these various programs as well. And the hope is that, as I said, people come into the process early. When they come to us, and we have a lot of information about various other programs that are out there, but most of the time, by the time a home buyer comes to us, they have the house, they've got their mortgage, they almost have their settlement date, And they were told by their employer, oh, you may also qualify for this program. We would like to be more influential in directing them to other programs so that you can continue to layer. As I said, we match the funds from the employer, but there's this Philly First Home. We recently, Urban Affairs Coalition just began having the employer assisted housing program themselves. So you've got an employer, one of our UAC employees who happened to stumble across an opportunity to purchase a home at about the same time that UAC had the benefit, came to us and said, so if I'm getting this from UAC, do I qualify for the Home Buy Now program? And I said, well, maybe, depending on your income. But I think you really need to go to Philly First Home first, or you should look at that anyway, to help improve your credit score so you really understand the whole buying process. Within a very short order of time, she was going to the table with $14,000. 6 months before, she barely had the down payment. But now she's got $14,000. And might have qualified for some other programs had there been more time to kind of step back and look and see what are the other things that are out there. It's generational. It's the immigrant population that we've got to make sure that the communication and marketing is going to. It is making it widely available. The goal with our Philly 5000 program is that we will have resources all in one spot for people to be able to find everything they need, all the resources to successfully move into home ownership.
Very good.
I have a question on that, like the title thing.
Yes.
We need to educate people when they're selling their house or buying a house, how to take the title. That was in real estate class. How to take, if someone died, the next person would get.
So I think, this is me personally speaking, that both lenders and the realtors, when there's a checklist to make sure, there's a checklist, and you're at the table and you're signing what seems to be signing your life away. But there's a checklist of everything you need, whether it's, forget mortgage insurance, homeowner's insurance. You have to have homeowner's insurance. Well, I don't think there's legislation that say you have to have a will, or that you can put that out there, but there needs to be a conversation. And people need to understand that if you don't have a will, then your family is going to lose this house, or could potentially lose this house. And what does that mean if your family loses a house? That's wealth. That is how much money going out the door, going out of the family.
Exactly.
And that's all of the generational wealth issues that have existed over time.
We need to educate people.
Yeah,
We need to educate
we
people,
certainly
exactly.
have that issue here in northeastern Pennsylvania as well with tangled titles. We've run into that. I mean, the land banks and others are.
Nursing home. I owned the house, so there was no issues.
Right.
And that a lot of people will not put the houses in their children's names.
Yeah, it's a step.
But if
definitely a
they
step.
don't, and they don't have a will, I mean, that's the thing, there's gotta be a plan for what happens here. And that needs to be explained and understood, again, even if someone's not gonna, but it's all part of estate building, and it's all part of the wealth building, and it's all part of financial education.
Yeah, part of the education portion of the process is bringing all of those pieces into play.
Right.
So we have about 5 minutes left. So I want to make sure we give you an opportunity to kind of finish off with maybe some suggestions or recommendations. Obviously, we're here to focus on action. A couple things that I heard throughout this conversation. One is, Chris, you're representing CDFI, even though you're a hometown guy here and know the market in Scranton as well. But we don't really have a well-established CDFI on the residential side, here in northeastern Pennsylvania doing any work at scale. I think that is a point that we should be, following up on and thinking more about. We talked about the organization that Leslie is part of, the Urban Affairs Coalition, who has a space. Like there's a space created
Right.
to have these conversations with the right people. It might be realtors, lenders, city officials, other folks who who can have a say in how we collectively work on this together. There's a space for that, and it sounds like there has been for many years, which I think is fantastic. We don't have that here in northeastern Pennsylvania right now, so we just want to make sure we acknowledge that. And then the barriers.
Convening of this group is a start of that.
Right, exactly.
You can see just with the questions that are being asked and the interest in this, there's space for this here, and it's taking that, and not just an actionable item out of this, but bringing the same group together on a regular basis.
Right. And so, Chris, gaps. Again, you're familiar with our region. You're working in some other spaces now. What do you see as some gaps that you can recommend we address?
Well, that's the primary gap, is that you need to have somebody that will work with immigrant population, and low to income borrowers. For years, NeighborWorks did, or Scranton Neighborhood Housing did, and for a while that was a very good, program that was in the city of Scranton, and was unfortunately not sustainable because of the fact that the market for purchasing those loans dried up. But if you'll remember years back, some of you, maybe none of you in years, you're old enough to remember this, but Pine Brook was brought right back to life by Scranton Neighborhood Housing, and as you can see, that the lack of that type of program has brought it back into a difficult situation again, but which you're addressing again, which is a good thing. So that's really important to have somebody who is consciously trying to make these types of loans. They're seeking them. They're proactively. That was something that Andrew said this morning, that you need to keep that on your list. You got to be very proactive about this. One of the things I just want to touch on, though, is we haven't talked about millennials. I mean, it's not. Millennials are having trouble building wealth too, right? Because they've saddled with student loan debt, and it's really been a very difficult situation for them. They're in a job market that's a little crazy right now. You may not see it because you don't touch it, but we see it a lot because I've got a big market area. But millennials don't get paid like normal people got paid before. A lot of them are working as freelance people, and they get sometimes 20, 30, 40 1099s as their income. Okay, they're working for a whole bunch of people. How do you underwrite that? Right? And where do they live? They live wherever the job is. So you say, okay, well, you haven't had credit, and you haven't had steady income, and you don't have any really stable residency because I don't have any rent receipts from you. How do you underwrite those people that are making a lot of money now? Now they're making a lot of money, but you can't underwrite them. So there needs to be some advocacy, I think. I think that's one thing that you need to think about, is there is a legislative piece here, or there's a banking department piece that you have to talk about. These are people exist. How do we underwrite them? Because your underwriting guidelines don't allow us to underwrite them very well. But they are viable home buyers. Right. We shouldn't miss that market. And so let's not create any more markets that people can't have access to capital. I mean, because that was a normal access to capital. People went to school, they made money, and you gave them loans. Well, now people go to school, they make money, and you can't give them loans. You've created another gap, and I think you need to address that gap.
Yeah. Thank you. So we're going to finish up this part of our breakout right now, just because it's 10:15 here. We'll have 15 minutes to take a little bit of break, then we'll be back again at 11:30. I want to thank Leslie and Chris for their input and sharing your insights with our group. Again, we hope you would join us for the second half of this, because really a lot of these conversations are going to be continued. There's a lot of the same themes that we're going to be touching on with members of our next panel. So can you give our panelists a hand, please?